Hello, everyone. This is Tom Fox back for another episode, and I'm absolutely thrilled to have back John Byrne. John, first of all, welcome back to the podcast.
Thank you very much for having me, Tom.
John, both you and Corlytics have had some exciting news recently, and I asked if you might be able to come back and tell us about some of the things, and you graciously agreed to do so. And the first thing I wanted to ask you about is the ISO 42001 certification, I think the first in RegTech. But tell me about what that process was and what it really means for you and the company to have that certification.
Okay, a lot of companies are in SaaS, and in SaaS, the biggest concern is obviously security, particularly if firms are actually taking an application to the cloud. And that has evolved over the last 10 years into a fairly robust process and a fairly robust set of do's and don'ts in terms of what has to be done. If you look at every piece of software today, from you look at the generative text on your phone to anything else, AI is everywhere, but and it's moving at a really fast pace, and it's a critical part of today's infrastructure. But it's also becoming a mission critical part of today's infrastructure. And actually, there's a number of risks with it, just as risks for having a software application in the cloud. So a number of things are going to really have to be, that's one part. The second is all new technologies are a force for good, but sooner or later, bad actors get their hands on it. So if you look at the whole cyber threat, and if you look at what's happened there, it's where something that was a force for good actually became basically had to be protected from people using the technology subversively. And AI actually is more vulnerable than even computer networks to things like, for example, data poisoning, skewing information in a different way. And then there are natural challenges with some of the AI in terms of hallucinogenics, which has actually become a scientific topic in its own right. So there's lots of benefits, but there's also some risks. So really what we've done as a company over a number of years is try to put in place a robust process as if we were with the same level of precision as if we were putting an application up in the cloud, which means testing the models, validating the models, and having a discipline called ML ops, or machine learning engineering operations. So operationalizing how firms put models into an environment, how to make them safe, how to test against all of the pitfalls. It's really about trying to make sure that the benefits of AI are there, and basically we manage out robustly the pitfalls.
So I would like to really move to maybe a broader topic on the evolving role of compliance. And I've heard you talk about in the past really maybe seeing compliance as not simply detective, but more predictive, or not reactive, but proactive, or maybe even moving to problem solving. And I'm fascinated by that discussion. I was fascinated by your remarks about that previously, but I'd like to sort of put a button on it with President Trump, who announced in February he was going to suspend enforcement of the Foreign Corrupt Practices Act, both investigation and enforcement. And I recognize that's anti corruption compliance, but it's led to an entire conversation about the role of compliance. Are we just here to enforce regulations or the law, or can we move to, I call it, embedding compliance directly in business operations, but it's essentially risk management at problem solving at speed. John, when you talk to people in the industry, particularly in your space, are you beginning to get the sense that people are thinking of compliance differently, or is that still a nascent conversation?
No, I think they're thinking about it differently. But if you don't mind me saying, I also think we're going back to the roots of compliance, because banking is over 250 years old. And 100 years ago, there was compliance in banking, even though there weren't that many laws. But banking at its core is actually about trust at the end of the day. And to create trust, a lot of banks have policies that they put in place to protect the firm and protect themselves. Over a period of time, in external regulations have actually taken the place of policies within banks. But the core disciplines still apply in that a lot of the large banks want to comply to policies that they consider good business, whether or not there's going to be a legal framework there. So I think that's very much kind of continuity that's there. That's one thing. The other element is a frequent complaint people make about compliance is it slows up business. It gets in the way. It's like the business prevention unit in a large firm. And I think firms are very conscious of that. So really what I think the application of AI is going to do is speed up business, speed up compliance, deliver better outcomes, give traceability, escalate things. So actually there's a need for lots of highly skilled compliance people. They just need to be focused on the right things. And this is really enabler of all of those good outcomes.
I have to stop there. It's ask you about your remarks around trust in banks. So I must go back to Mary Poppins. Then I'm going to go back to It's a Wonderful Life. We have all seen bank runs, and a bank run starts with a failure of trust. But that didn't end at the end of the 20th century. In 2023, we had, I think it was Universal Bank in
That's right.
California. And that was essentially a bank run using modern technology. So you're the first person that's ever brought up the example of financial institutions, but you're absolutely right. They all run on trust. And if you don't believe your money's safe, you're going to try to get your money out. And if enough people start to do that, you have a complete collapse of the system. So that trust that banks self put in place into policies and procedures, then you moved us forward to the regulatory framework. But I guess, and sort of before I interrupted you, that part I heard you say of going back to the future is that good compliance can be good business.
Absolutely. And that's at its core, good compliance is good business. I think where a lot of banks are, and if you look at some of the bigger banks that have sustained themselves and have survived the crises, without mentioning, there's one banker and one bank that really comes to mind. But basically, at its core, they will tell you that banking is actually about trust and is about doing the right thing. And really, you shouldn't be waiting for a regulator to tell you to do something. If you think it's right for your business, and as a way, at the end of the day, if you have happy customers, you'll have good business and happy people. So happy customers come from happy people, which comes from generally doing the right things. And if firms do that, they will have a sustainable business model. They also have to comply with the law as well. But basically, they should be doing the right thing, whether or not there is a regulation there.
John, what do you see as the case for AI and moving from cutting edge to literally an everyday tool?
I think so. We're seeing it more and more in that at the end of the day, a lot of AI tools in modeling and so on has really been available for a very elite number of tier one banks, where the level of investments required were generally in the 9 or 10 digits in terms of millions. Oh, sorry, 9 digits is like 100 million plus. So basically, banks have been capable of making those investments and putting those into production. As that technology gets proven, that technology then becomes available for everybody. Now, for example, it happens in the motor industry. If you look at the most advanced, expensive cars, 5 years after something has been put into a limousine, you'll actually see it in every car. And it's exactly the same thing is going to happen here. And that once it's actually proven at a high level, which is something expensive and elite, it's actually then going to be brought down to benefit everybody. And this is really, I also think AI is a great leveler. So it actually means that a tier 2 bank or a tier 3 bank or a smaller financial firm is going to be able to compete more as a level playing field with some of the bigger actors. So it's also going to make a lot of things possible. And I also think then it will make compliance and regulation no longer a barrier of entry for the smaller firms.
I just published a book on the use of AI in compliance. And I did a case study on Citibank. And I used that exact example. I didn't know how much they'd spent, but I guessed it was 9 or 10 figures to create an AML data analytics system. Now, they didn't call it AI, but my point was, number one, it's already been done. And number two, in 2025, companies like yourself have made it cost effective for much smaller financial institutions to use the same skills and technology. So I was fascinated by your example around that. And I've also heard that example around automotives and higher level or more expensive cars and how that kind of percolates down to people like you and me as well.
Exactly.
Let me ask you about precision versus scale, SLMs and LLMs. You've written about this. I know you've had some thoughts on it, but many of the listeners will know what an LLM, but could you explain what an SLM is and how it may differ, or your thoughts on it via SLM?
So obviously, large language models, and I think everybody knows what large language models are. They're terrifically powerful, terrifically useful. They've got a number of pluses and they've got a number of minuses. If you look though, that's a large language model, and that works great if you've got a very large amount of data. But say, for example, you're in a financial institution and you have a number of controls or a number of policies that are very specific to you. So if you look at controls and if you look at AML controls, these are things you don't want to get out of your own institution. They need to be private to you. And there isn't that much data there. So a small language model can work on basically a smaller data set. It's a model that's run privately and you train it yourself, or it can be portable, but it doesn't need a whole lot of data. It's a simpler, more traceable algorithm. So you can probably figure out how the algorithm came to a decision, which is very useful. So it's a piece of discoverable AI, as opposed to a large language model is where you throw in lots of information. But every information you put into that large language model is helping to train that model for other people. But technically, some of the confidential information you put in there, because it's public, could be usable by somebody else or by another firm. And when you're coming into sensitive security information about a firm, you don't necessarily want to put that up into the model. And lastly, because it's very general, it works very well for general text and can generate text. But if it's very highly nuanced and very expert orientated as a system, you can get what are called hallucinations. So you get a result that's wrong, but a non-expert will read it and it's very plausible, but it's actually wrong. So that's one problem with it. And also then the data can be skewed. And lastly, it takes about 2 hours to train a large language model generally, 2 hours to a day and a half. So it takes a long time to run these models. They take a lot of energy. That's one of the reasons why basically data centers are basically so greedy for energy right now. Whereas a small language model is very efficient. You don't have any of those infrastructure rows with it, and you can get it to be highly accurate, but also you got a big privacy advantage to it. So there are circumstances which suit one and circumstances which suit another, but there is a bit of laziness creeping into the industry where people are just throwing things that should not go into a public large language model in there when a small private model will do. Does that make sense?
It does. So, John, you mentioned the term a little bit earlier, data poisoning. I was not previously familiar with that term, and I was wondering if you might say a few words about what that is and how that risk might be either or both rather identified, assessed, and then managed.
Okay, so if you look at data poisoning and kind of where it comes from, so very large models that are publicly available are trained on data. So sometimes bad actors can deliberately change a model or skew a model based on putting a large amount of fake data or inaccurate data into the model. So it can be used, for example, sometimes bad state actors will use this for things like, it can be from anything from public opinion right the whole way through things in the military realm where people read something and they get a result that's skewed. So if you skew the data, you'll skew the model. Once you skew the model, even when you put good data into a model that's skewed, it can work in slightly the wrong way. So it really can determine basically the accuracy of the model. How do you test against it? Really, you should be Okay, and again, part of the AI standards that are going to evolve is to check out the quality and provenance of the data. So where did this data come from to train the model? Was it legally obtained? Do we know where it came from? Or the different versions of this data? Is it good? Just like the way we would with any big bank that's running, for example, a transaction system, will test the system based on good data before they put it into production. So there's actually lots of classical data cleansing and data checking techniques that can be used to do it. And lastly, we always have to be vigilant as an industry in terms of what comes out of a model and get experts to actually check whether what's there actually makes sense or not.
John, I often tell compliance professionals that the regulators will not punish people who made the wrong decision or were negligent, if I can use that legal term. They will punish you, number one, if you didn't make a decision and you should have, or number two, your decision is not documented, so you can't demonstrate with an audit trail the steps you took or decisions you made. Does that translate into your arena for both regulators, what they're expecting, and how compliance professionals or other professionals should respond in terms of repeatability and traceability?
Absolutely. Anyway, within firms, most firms have got well-established internal audit functions. So first of all, if you look at internal audit, it really wants to look at areas it audits lots of areas, but it takes a risk-based approach. So it'll look at the highest risk parts of, say, for example, compliance in a firm, and it will actually just go through an audit trail of all of the controls that were there, and did the firm do what it said it was going to do? And if A made a decision on this basis, did B make the same decision? So they'll be checking for consistency. They'll also be checking for accuracy, because it's quite easy to look at a historic event where you know the answer and actually go back and see if the firm actually did it in the right way. So that full audit trail is very useful internally within the firm. But if anything bad happens, or the audit or the regulator does do an inspection, they're really going to go right through the train and say, I want to see how the firm became aware of this regulation. I want to see how this reg change was managed. I want to see, once we see the firm saw it, did it go to the right place? Did the right actor deal with it? How did they make a decision whether a change was needed or not? Did it impact a policy? Was that checked upon? Did it impact upon a control? What was the impact of that? So basically, there is a very high expectation from regulators today for complete traceability right throughout the audit trail. And really, the only answer for that is technology. It just isn't possible to do this manually anymore. So we're now in a place where, if you want this standard of auditability and traceability, it's just not an option not to automate from here on in.
I'd like to turn now to the criteria for automation success and maybe ask you, what do you see as the gold standard for compliance in AI?
Okay, I think so. First of all, accuracy. So what's there has to be accurate. And what I mean by that is the models of the AI itself need to automate something to the same standard or higher as if a human was doing it. So if you look at humans, for example, classifying documents, or paralegals classifying documents, there's about a 98% accuracy. So for automation to be viable there, the accuracy levels has to be 98% or above, and ideally above. So first of all, if there isn't the level of accuracy there, then people have to do it manually. So that's an absolute must-have in terms of making automation viable. Consistency is actually an advantage that you get if you automate something. So if you have two individuals and they have an opinion and they're different, that's an unhealthy thing. So one of the things that the models will do is set aside a consistent criteria, so everything is consistently treated in exactly the same way, and that massively reduces risk. The next thing is the speed or dynamic refresh. And what do I mean by that? If a regulation changes, in real time, that regulation can have a ripple effect in terms of implementing a policy or implementing a control, or at least giving it to actors so that they can approve the change policy or the change control. So you have this dynamic refresh. Now, that if you look at what I've just described, so a big reg change impacting on a policy, that can be 6 months. So that 6 months of work can now happen in real time and get improved. So that's a massive win for everybody in terms of what's there. And lastly, traceability is a must-have, just along the lines that I've mentioned. And with traceability then is auditability, either for internal audit or in a worst case scenario, if a regulator is actually looking for your audit trails.
John, one of the reasons I was so excited to visit with you today is basically to ask you the next question, which is why Corlytics is reorganizing to be AI centric, but literally from the ground up. I know of a lot of companies that are doing it from the top down or maybe at a level of management, but it seems to me you guys have committed to literally from the ground up. Where do you see this taking Corlytics to the next level?
So, Tom, we're on a transition at the moment to actually go from being a software-centric organization to an AI-centric organization. So there's a couple of reasons we've done that. One is that we've made some acquisitions, and every company we've acquired has had a different software development process. So we have a software development process, and then two other firms that we've acquired all have different software development processes with different levels of agility and robustness brought into them. So we've had to change to come up with one process. And when I actually looked at it, I said, actually, we need to become, if we're going to change our processes anyway, we may as well become AI centric rather than software centric. So that actually means how AI is put into production, how AI is tested, is how we're going to do everything, rather than go back to a much older way of doing things as a software company.
So let's talk about dynamic traceability from risk identification to response. What's the traditional change to policy lifecycle, and how can AI help us think through that?
Okay, I'll describe in a couple of seconds what 12 months of reg change management looks like. So basically, there's a very large, say for example, it came out and it really changed the whole industry. And then there was MiFID 2, and I don't know why they called it MiFID 2 because it was just massively chunky and it changed lots of, if you look at the FCA handbook as an example, there were impacts with Dodd-Frank, it changed about 40% of the handbook, changed lots of things. So very large piece of reg change that came in, all had to be analyzed, all had to be sent to different actors because it didn't just affect one thing, it affected multiple things within the organization. So the different changes had to go to different parts of an organization so that they could actually assess the impact that was going to be there, first of all, on the business model, and then on all of the ways that they would control the business in terms of risk and compliance. So then from there, they had to assess the risk, not just assess the change, also assess the risk. What's the risk impact of this? Based on the risk impacts, then they had to look at the controls and changes in controls that were there. And based on the changes in the business, they had to change the policies and basically get some really senior people on the risk side looking at the controls and really senior people on both the legal and compliance side looking at the policies and procedures, and then implementing those, training those, and putting some kind of traceability on that in terms of a manual system. And what I've just described to you, that takes a year. What we've managed to do, and it's not just one model or not just one piece of software or elements, is we've gone from basically managing a reg change, so monitoring a change, marking up a future regulation based on the change we can see today, marking up if that's what the change in the regulation is going to be, what's the change in the obligation, then from the change in the obligation, what's the change going to be in the policy and procedure and so on, and do the same thing to controls. So imagine what I've just described happens in 1/100th of a second. That's what we're talking about.
Wow. I want to now turn to the one thing I focus on because I think this is the future of compliance, and it's compliance as a strategic risk management resource, tool, and profession. And I mentioned the president's suspension of anti-corruption enforcement back in February, and it caused many compliance professionals to think about what's the future of our profession. And one of my responses was that we need to be the leaders in strategic risk management. Part of it's because that's what compliance professionals do day in and day out. They identify a risk, they assess the risk, they put a risk management strategy in place, they train on it, they implement it, monitor it, and improve it. But with AI, in just the process you just went through on dynamic traceability, we can now do that risk management process at speed. And I can't tell you what the next risk is because 5 years ago we had a first pandemic in 100 years. I didn't have that one on. I couldn't have told you 6 weeks ago we would have the most insane tariffs in 100 years. And I use both of those examples just to point out there's no black swan events anymore. There's just events. And so I really wanted to maybe move towards asking you about embedding compliance directly into business core operations, because I see that at least as a future for compliance. Could I get your thoughts on that, John?
To be honest, that's actually why I set up the firm. So my background is actually in post-trade and operational risk. And really what I've always wanted to do is exactly that, is embed compliance into the operations of a firm. At the moment, the way it's set up, apart from the technology, it's slightly adversarial. There's compliance on the left-hand side, and then there's the operations on the firm on the right-hand side. Neither really understands the other. So the compliance people are saying, this is what we have to comply with. I kind of don't really care how you do it. Just get on with it. And the operations people are saying, I don't quite understand what you just asked me to do. And really, those two parts of the organization have to be a marriage, and they have to operate in sync. So just to give you an example, if you look at any large tier one bank and they win a mandate, it takes about 40 days to open an account with a new large corporate client. So that can all be speeded up in real time, but that actually can only be done if people from the operations side of the organization and people from the compliance side of the organization actually come onto the same team. And if compliance needs all of the right things to be done, the second thing compliance needs to do is learn. It needs to be a learning organization. So how can we do things better? How can we have a better outcome for our clients? How can we, it's nobody's interest to wait 40 days to open an account. How can we, that's a bad outcome. How can we do this better? How can we work together and collaborate together to do it? Because the other thing that we're going to get from kind of real time or faster compliance is what I call what if scenarios. What if this happened? What if that happened? What happens if we go into this market? What happened if we offer this product? So I have this new idea for a product. So I also think if you look at the whole product management side of organizations, you can actually speed up the introduction of new products. You can basically reduce pain points for clients. You can proactively do all of these things, which is basically good for everybody.
John, as we move towards the end, we've got a few minutes left, but I wanted to maybe get your thoughts on where you think RegTech is heading.
So again, I think RegTech is heading into a place where instead of RegTech being something that's going to be in some of the limousines in the industry or the top 10 banks, RegTech is for everybody. So RegTech is going to be out there for every regulated player, from the smallest actor right up to the bigger player. And what I hope RegTech will do is two things. Is it'll be an enabler for business, as you say, giving lots of helpful what if scenarios rather than just kind of looking backwards. Because I think another criticism people have of risk and compliance is that we're looking in the rear view mirror all the time rather than looking forward. So I think it's gonna be forward looking, helping the business kind of solve lots of problems, but really giving better outcomes to the clients of organizations and speeding things up and taking the bottlenecks away.
John, unfortunately, we are now at the end of our time, but before we leave, I wanted to ask you if any of our listeners wanted to connect with you or find out more about Corlytics, what would be the best place or places for them to do so?
The best place is www.corlytics.com, and if also info@corlytics.com, and you can connect with me on LinkedIn and lots of different socials. So I'd be delighted to talk to any of your listeners out there about anything.
John, this has been an absolute delight. I hope we can continue this conversation.
Thank you very much, Tom. Thank you.
Compliance Podcast Network. Start your mornings with daily compliance news, quick, sharp updates on the top compliance and ethics stories in under 5 minutes every morning in Compliance Podcast Network. Because compliance never sleeps. Need practical advice fast? Check out Compliance Tip of the Day. One actionable idea to level up your program. Short and sweet, every day on Compliance Podcast Network. Got 10 minutes? We've got the week's top 10 stories. 10 for 10 brings you the big compliance headlines. Fast, fun, and focused. Every Saturday on Compliance Podcast Network. And don't miss the Sunday Book Review, where compliance meets culture through must-read books and big ideas every Sunday in Compliance Podcast Network. Whether you're in the office, on a walk, or commuting, stay smart, stay ethical, stay tuned. Only on the Compliance Podcast Network. Available wherever you listen to podcasts.